Carter Weston
Which one you like better?
I like Mason better. Weston's fucking insane.
Bro, you funny, bro. You funny as hell. Alright, I just started the live, so let me go post this real quick so people can join it if they want, and then they'll be able to do all that. So post this on here. Where's the link at? Okay. Let's see. Day 8. Up and running now. Cool. Bet. Now we Gucci. All right. You said what?
Oh, it was my phone.
Nah, you straight. All right, cool. So let's start off with the homework, man. So, actually, before we do that, I kind of want somebody to give me a quick overview of what we went over last time, real quick. So we kind of just redefined some concepts. So who can kind of? Well, Benny's driving, so I'm gonna see if Carter can kind of tell me a little bit.
All right. So I think I missed last class, but you told me it was just review the one before that. So I remember you were just going over the market shift and liquidity sweep and helping people like kind of really hone in their verbiage about how they explain it. And then giving that tip about how you can find the market shift by going from the last candle that broke the liquidity and then like going back left and seeing where the most prominent lower high is from there. And then that's your market shift. Yeah, oh, and you're also talking about like equal highs being more like higher probability of liquidity sweep right there, like they're points you want to look at. And you also talked about imbalances and liquidity points as being like targets for where you should like expect your trade to go, or the price to go.
Cool. So yeah, you moving in the right direction, bro. You got a lot down. Only thing I would clean up about what you said, those equal highs and equal lows, yes, they are still stronger points of liquidity, but those are just simply like easier to see. Anytime you see a level where price move quickly away from, and that can be defined as like really long wicks or strong candles moving in a reverse direction, you understand that that's going to be the draw on liquidity, okay? So I remember last time I told you guys to put that stuff in a group chat, and I want you guys to kind of mark down the stuff that I had going down. So let me see. All right, we got both of those in there. Okay, so let's see what we got. This is Carter's. Okay, so you got your liquidity sweep, you got your market shift. Okay. Let's see what we got here. Got a liquidity sweep, got your market shift. Okay, cool. Let's look at this one. The liquidity sweep, shift. Hey Benny, what's your number 4? What is that? What is that?
That's just the expansion, just to show that.
Like the start of the expansion?
Just that long wait. Well, that whole like that's just the expansion.
Okay, cool.
Going down.
So yeah, let
And
me.
then the fifth one was the target, like where you took profit.
Okay, cool. Let me. I'm gonna show you my screen so that y'all can kind of see my breakdown. So I'm gonna pull up both screenshots. I'm gonna give you an idea. So Carter, first of all, can y'all see my screen right now? Well, yes. Carter, can you see my screen? Benny, you driving, so just like you can just listen.
All right, bet.
But yeah, like I was saying, Carter, you can see my screen?
Yeah.
All right, bet. So kind of like what I was showing you when you was at my crib, right? Mm-hmm. Everything's gonna start with that market. With that liquidity sweep. For the trade models I'm gonna show you guys, these are just like the easiest to kind of pick up on. You want to make sure that you guys are able to identify like these easy points where price is beginning to leave its mark, because it's going to help you be able to start tracking the next move that's going to confirm your bias. Okay, so in this example, right, we can see that price has swept a high right here, and then this most recent low right here. You can see how price spiked right through it. Okay, and the thing that you asked me about last time, you were like, how do you find your entries? Well, I'm showing you this right now. These purple boxes, what do you think I'm highlighting right here?
Those are fair value gaps.
Okay, and just by looking at the chart, how did price react when it came into these fair value gaps?
It came in reverse.
Okay, so let's continue your lingo, right? Or let's kind of refine your lingo. So if price went up bullish first and then it had a market shift down, that means it's going down. So when price came back into this area, all it did was retrace before continuing the expansion in the given direction. Make sense?
Gotcha. Yeah.
So the reason why it's important to use the correct lingo is because I don't want you guys to confuse yourself, or I don't want you guys to misinterpret something that I might be saying, okay? It's very important because it's going to help you keep track accurately of what I'm talking about and what I'm referring to. So there's a reason why I felt like this was a textbook example on how to kind of follow this up. And the cool thing is I'm showing you guys, like, there's not really an excuse on why most people can't do this. So this account only had like $30 in it, bro. You know what I'm saying? So you can use these concepts with no matter how much money that you got going on, because the concepts aren't necessarily going to change, and you're going to see just how well they can help you improve like the profitability in your account. So this right here, these fair value gaps, this would have been an entry, right? Another thing that would have been an entry would have been this right here. This was what we call an order block, okay? So
the blue candle?
Yes, this long blue candle, and I'm going to explain why. All right, so the things that we're going to go over today, I'm going to go over how to identify like entries for your model, right? So the biggest things that you're going to want to focus on as entries is going to be two things. It's going to be your fair value gaps, and it's going to be your order blocks, right? So I want to go into detail on how they work. Now, I also want to show you an example here. When you start getting a little bit better, you're gonna understand that price won't always give you that entry going back into where you at. So you can see in this example, I actually got in at the liquidity sweep, right? And you can see how when price reversed, she just kept going. She didn't really like try to retrace or nothing for real. Make sense? So you're gonna have situations like this, but it's okay if you miss it. So I don't want you guys to have this thing called FOMO, which is just the fear of missing out. When people have FOMO, they start making very impulsive decisions, and this is how their account starts to quickly get drained in the negative. It's because you're not chasing price and you're not following your model. So I want you guys to understand that when price is moving pretty heavily and it does not give you your entry, it's completely fine if you miss it, because these moves happen every single day. They repeat themselves. So understanding that, that's going to give you a strong level of confidence and being patient for what you're learning, right? Because when you start doing that, now you're building proper trade habits. Now for this example, you can see right here we have this old high right here at around 21,726. Notice how price liquidated the high, right? Once you started doing that, you can see how once price broke down and came back in. For me, I use this as my order block because I had already, before I had even traded for the day, I had already mapped out my take profit, which was down here, because I used the higher time frames. So one thing that I'm always telling you guys is using the higher time frames to form your bias, and then using the smaller time frames to kind of refine your setup. Reason being is because if I understand the overall picture or the overall direction where price is going for the day, now I understand how to use PD arrays or price delivery arrays on the lower time frames to get and find my better entries. So that's kind of in a nutshell. I know I feel like I kind of said a lot, but in a nutshell, that's kind of like how I'm able to frame these type of setups. And you can see I caught almost over, what is this, like 150 points on this move. So if you're able to find these setups on the higher time frames, you're going to be able to catch these longer swings, which is very useful, okay?
Can you explain like when you're looking at that second chart, like I don't know, like you took your why did you take your entry right at the top of the liquidity sweep? Like when I'm looking at it and I'm seeing liquidity sweep in the market shift, I'm feeling like you would take it right where I put, like in my picture where that purple box was. So like what were you thinking about? What made you think differently that you should take it there? You know?
It's because there were equal lows down here. So I already knew price was going to come here, and it was 10 o'clock. So around this time, or right here, this is actually during, let me just pull it up on the actual chart. It'd be easier if I describe it that way. So what day was this? This was June 4th. Okay, let me walk you through my thought process, and then you're going to see how it all comes together. So let's go down to the 5 minute. Let's come here. We're going for June 4th. Let's go for 9:30 a.m. Okay, so this is what we have, right? So at the time, make this a little bigger. At the time, this is what I'm looking at, right? This is essentially like the move that I caught, right? So as price was coming up here through 930, right? We can see 930, she shot all the way up here.
Yeah.
There's like relative equal highs right here and right here. So if I kind of draw this out, price came through. You know what I'm saying? Honestly, you know what I was really thinking? I wanted to see if price was going to shoot down here initially because we were in this long fair value gap right here. But this is why it's good to be patient because price didn't. She shot all the way back up here. So when she came up, all she did was just liquidate this this buy side liquidity again. So when I understood that, I was like, okay, price is most likely gonna want to start coming back down. So I already knew these relative equal lows right here, like these are relatively equal right here. I can mark this up. Right, this right here. And then on the 4 hour, I had this fair value gap. Where's my thing? Oh.
So it's just like multiple targets you could have taken out, but it only took out equal lows instead of the fair value gap. Until later.
So this is something else I want you guys to see, right? It really didn't hit it until actually 2 days ago or yesterday. What's today? Yeah, yesterday is when it actually hit it. So this is why you guys need to be able to go for low hanging fruit. Okay. So when I say that, you don't always need to be swinging for the fences. You want to be able to focus on the draw of liquidity, right? When I say draw of liquidity, think of it as like a magnet, right? So a magnet is going to draw something to it. That doesn't mean the actual object is going to hit the magnet, but I understand the direction in which that object is going to move. It's the same thing with price. If I understand where the magnet is, I understand the direction price is going to go. So I need to be looking for PD arrays on the way to that target for me to start hitting. That's my TP, right? Because if you always start trying to swing for the fences, you'll have stuff like this happen, right? So when things like this occur, most of the time you're going to see this happen during NFP week, which is just the first week of the month, right? So when that happens, we understand that price is going to be a little bit more erratic because this is when a lot more high impact news is going to be dropped. And at this point, I don't want to say it's up in the air, but price has more leeway to kind of do what it wants. So at that point, you just want to be very mindful of your account because you don't want to set yourself up in a position to basically get your account chopped cheese. You know what I'm saying? we trying to go up, not down. So when I understood this, I just understood this would be the draw on liquidity. My target was actually this four hour fair value gap, right? Because remember how I said banks, they move on higher time frames, right? Because higher time frames, they hold more weight. So we're gonna redefine the setup a little bit more. Let's go back down to the 5 minute. Okay, this was June 4th. Okay, so once price, I'm gonna delete this one just to make it a little bit easier to see. Okay, so once price took out this high, for me this was a liquidity sweep, right? Buy side liquidity. But like I said, I was already knowing that price was gonna start coming back down here. You're gonna start, as you start trading a little bit more, you'll start getting more reps in your belt, under your belt, and you're gonna be more familiar with the way price moves. And that, especially because this was during NFP week, I kind of had a strong, like, you know what I'm saying, my spidey senses was going off. Like I kind of already felt like price was gonna go here, and honestly, I could have been wrong. Like that could have 100% been the case, but this high right here would have been my stop loss, right? But I want you to kind of keep in mind of the risk to reward ratio for this trade idea, right? So if my TP is going to be this blue shaded area, right? For me to get my entry up here, let's go back. June 4th, 9:30. Okay. For me to get my entry up here, I want you to see just how solid it is, right? So let's pull this up. Here is my short position. Okay. So I basically got in somewhere like around right here, right? This little fair value gap. This is kind of the entry that I was targeting. So for price to come all the way back down here, and then my stop loss to be up here, I'm risking 18 points in order to catch 133. That's a good risk to reward ratio. You know what I'm saying? So like I would have been perfectly fine if price would have came back up here and then swept me out at this point, right? But me understanding where the draw on liquidity was going to be, I had a strong inclination that price was going to keep coming back down here, right? So yes, you're right. You could have waited because look, you would have got your shift right here. Okay, so let me delete this. So once price made this low, it came back up and then violated it right here. This right here would have been your market shift.
And you would have took it somewhere inside that fair value gap right there.
Because look, and you marked it correctly. So like, look, you still would have caught damn near the same amount of points. Like you didn't really cheat yourself. If anything, this would actually be the smartest entry, right? So price tapped back up in here a few times, came all the way and swept this recent low, right? So this right here would have been your primary target.
Yeah, I understand. That's just a skill issue right there at that point.
Yeah, but honestly, these are smarter entries. Like this is the stuff I want you guys to learn, right? So let's kind of go through it. You got your liquidity sweep right here, right? And then you got your market shift. Look, price came back up, and then you have your market shift right here. Once this happens and you enter in right here, you want your stop loss to really go above, excuse me, the candle at which you're going to use for your entry. So if you're going to use this fair value gap as your entry, then your stop loss needs to go right here above where my cursor is. You know what I'm saying? But I will say, when I see situations like this, I typically go for the second candle right here, just because whenever there's fair value gaps stacked on each other, I typically can see price come up into the second fair value gap before returning in this direction. So that's just something that I have seen in my personal time trading. But yeah, you definitely could have caught this right here. This would have been a smooth bag. So let's just see how many points this would have been if you would have caught this. So just to kind of show you how you would frame it, let's just say you got in right here. Stop loss at best would have been 22 points, and then your TP would have been this low, right? This is what we call going for low hanging fruit. So this is why sometimes you'll see me pop multiple entries. It's for reasons like this, right? So my first entry is going to be going for that low hanging fruit, and then my second entry is going to be for my overall target. Because you'll see there'll be times where price just keeps going, right? And at that point, it's like, you know what I'm saying? I might as well give me a little piece of that too. So
would you let your if you took another entry, would you let that trade in for a day?
You can. You can, but I was gonna say it took me out. No, yeah, but I'm saying like it took me out. So you're gonna see ways in which that it does. When price starts to violate itself, I think I got taken out like right here for my second entry, because for example, where is it? Yeah, it was here, because I'm gonna show you why. This is actually a good. Well, let me actually show you what an order block is first before I start explaining to you why I knew that it was gonna get invalidated right here. But this is kind of just a breakdown of like that first trade. Let me see if I can pull up that second one real quick. See, I know what I'm talking about. This day was on, what was this? June 5th. All right, so this is the next day, June 5th. $9:45. Okay. Here's another one that I took, right? So 9:30 was right here. You see how price was just consolidating?
Yeah. Uh-huh.
So as price was consolidating right here, remember how I told you equal highs, right? They're a good target for liquidity. This right here, you see these relative equal highs? This is called internal liquidity because it's inside this whole price range, okay? So which means I wouldn't be surprised if price takes out these highs first. That's exactly what price did, right? So these equal highs got taken out. Let's put this right here. Let me say the I.
This is that second trade.
Yeah, this is that second screenshot I dropped in the chat. So something else I want you guys to kind of pick up on. Well, let me get to that first. So because I'm gonna show you there's more than one way to kind of skin a cat, right? But you want to find the one that stands out to you the most. It's just easier that way. So these two little highs right here. Let me see if I can mark them for you. Can I make that smaller? Alright, that's too small. Let's take this off. Because I need y'all to be able to see what I'm referring to. Oh my goodness, bro. It's work. Alright, so this one. And this one. Turn the magnet back on. Okay, so these two orange circles, these relative equal highs, right? Notice how price at 9:30. You see this 9:30 candle? See how it swept it? And then look at the immediate candle. She shot all the way back down, right? Now we got a market shift, right? So this right here, for me, would have been our market shift. Or in this case, you could have used this one too. But for me, it would have been more valid right here. And because I understood, you'll see a lot of times when whenever you have these heavy price runs early in the morning, typically during 9:30, or let me reword that. So there's some news that likes to drop at 8:30 sometimes. Whenever those price runs are extremely heavy, you typically see at 9:30 price likes to completely negate whatever just happened, right? Because at 8:30, that's typically when price starts hunting for like liquidity. Okay, so after that happens, I kind of understood like, okay, price is gonna keep coming down, and also like I said, we still at this time had this right here. You know what I'm saying? So I'm already knowing. I'm like, okay, the target still ain't get hit from the other day, so this is definitely gonna be a draw on liquidity again. So
that's for which day? That's for the previous day.
Yeah, we. If you were in here earlier, I also talked about that. But here's something else I want you guys to see too. No, you good. Here's something else I want you to see too. Look, here's another form of buy side liquidity. So now I'm giving you guys multiple reasons why I was looking for a sell. Okay, so at this point, and look, is this internal or external? I'm gonna let somebody answer.
External.
And why is it external?
There's just a lot of movement inside this. These are on the higher time frame also.
So yeah, just to kind of condense your answer, this is the outside of this entire price range, right? So I understand when price goes above here, most likely the reaction we're gonna get is gonna be stronger. And on top of that, you're gonna see here on the daily, we're also in the fair value gap here as well. Okay, so there's multiple things coming on. And remember, what did I just say about higher time frames? What are
They
they
hold
doing?
more weight.
Exactly, right? So now understanding that, let's go back. Nope, wrong one. I want the 5th, 9:30. Okay, so now that I understand that, we have that higher time frame liquidity right here. So I understand this is going to be this is now turning into a high resistance buy side liquidity, right? So it's already taken out. I don't really want to see price go back up there, right? So once price gave me this liquidity, this internal buy side liquidity, and then had this market shift, then look, you got your fair value gap right here. You mark it up. Boom. So this right here would have been your entry.
Cool.
And you can
So
see
you really
it.
want to start. That top down analysis. You start up high and you find your points of entry, and you kind of zoom in like deeper in that same one, and kind of find it again and again until you find the exact entry point you want to go for.
Exactly. But I want you to see how well this lines up with the screenshot that I had. So I wonder if I can pull it side by side. Can I do that? Maybe if I just go like this. Y'all can still see my screen? Y'all can see the screenshot too?
Yeah.
Okay, so I want to show you guys how this matches up. All right, boom. So after we had this sweep, you got this push down right here. So remember how I was talking about the two things you're going to use as your entries is going to be order blocks, and it's also going to be fair value gaps, right? An order block is just a candle that price is going to use to basically trampoline in the direction that it's going to continue in, okay? So that's how I got my first entry right here. So you can notice I did not get my entry in the purple box. I got it. I was trying to get it right here. I really should have used the sell limit, but those help you get more accurate. I'm not gonna lie, sell limits, bro, they get you right. If you know what you're doing and you know what you're looking out for, you can snipe so many entries, bro. You can snipe so many entries. I'm not gonna lie to you.
Sell limit. Explain what that means.
Say that again.
Explain what sell limit is.
So a sell limit is a different way to be able to submit your order for a trade. Basically, there's two different types, or there's three different types of orders, okay? So you're gonna have what you call a market execution, which is it's a manual execution, which means you physically do it yourself. Or what you can do is set what they call a limit order. A limit order is basically it's like booby trapping the market, right? So if I feel like price is going to, let's say price is doing this right here, I can set a limit order inside this fair value gap so that when price comes back up into here, it's gonna automatically trigger me into a sell. And then it's going to start moving in towards whatever my trade that I have mapped out. You know what I'm saying? Those are extremely, extremely, extremely useful, bro, because they help you with patience and they help you not be very impulsive with the moves that you're looking to catch. So we can get into all that later, but I really want to get into the meat and potatoes before y'all start getting off topic. So with a order block, the way that you can validate it is by liquidity, right? So after liquidity gets swept, the candle that is used to break the liquidity, this is typically what you're going to aim for as your entry point. So I want you guys to pick up on something, right? You see how when price came back, this blue candle that took out these relative equal highs, right? This internal buy side liquidity. Notice how price came right up to it and then rejected it really very heavy. This is what you call an order block. So this candle right here, this blue candle would have been the OB. So let's mark that up. Put this right here. Bring this out. Label this as an order block. So I can change the color. Make it a little easier to see. Let's go orange. Nah. Let's go red. Yeah. Make it a little thicker. Okay, so this right here, this candle right here would have been the order block. Now, I also want to show you guys this. The row of candles that make up that sweep could also be considered the order block as well. Me personally, I prefer to use the candle that broke it because that's typically more of a sniper entry. You will get times when she might just come back into where she broke and then going back down. But either way, you can see that there's still a fair value gap right here, so you still could have caught your trade. But I want you to kind of see the way price reacted after that happened. That's how I got my second trade, or I'm sorry, my first entry.
All right,
and then on top of that,
okay. So
wait. Let me finish. Let me finish.
Oh yeah, go ahead.
So now that we have that, I want you guys to see how I got my second entry. Right, I used the fair value gap. So notice how when price continued down and she came back up, look at the area that she came into before continuing in her direction. Right. So as price was continuing to break these lows, she came back up and retraced into this fair value gap, and then price continued towards my TP, which was right here, right? And you can see how it lined up right here. So let me mark that out real quick. So this is a way how we pyramid entries, right? Or we stack our entries. These are ways to be able to multiply the profit in the trade idea that you have mapped out. So instead of me having one entry, now I got two, which means I'm increasing my profit. So this right here would have been the sell side liquidity on my TP. And you can see how when price came back down through here, what she ended up doing, accumulating in reverse. See what I mean? But all you need is just one trade for the day. You don't have to catch multiple trades. If you understand the basic idea of how to just follow like these concepts that I'm showing you, you can make money. Like you don't. This is what I'm saying. You don't have to be on the charts all day, bro. Like them people who are like they got 12 different screens and they're on here from market open to market close. Like, bro, you doing too much. You know what I'm saying? Just chill, bro. Like I just showed you. You could have had this in what this. You would have been done in like 15 minutes, bro. You know what I'm saying? Like that would have been your whole work day. So let's just say, price was up here. It came all the way back down here. How much was this? Yeah, so about 100 points, bro. You know what I'm saying?
That's
right there. But also keep in mind you had a second entry, so it's really worth more. So like let's just say 100 plus. Where's the other one? See, I got it about right here. 100.
Was this from today or yesterday?
Nah, this is from the 5th. So yesterday.
Okay, yeah, that was yesterday. Yeah, I actually took this trade.
Exactly. Look, so this right here would have been another 70 points. So you just turned this 100 point move into 170 points. You know what I'm saying? So instead of this being $100, now that's 170, or instead of this being $1,000, that's 1,700. I mean, you know what I'm saying? So that's why I'm trying to show you, like, you can use these concepts to really stack your entries, but you also got to keep in mind you want to pyramid your entries correctly so that if price were to like reverse, then it's not hurting your account. But we're gonna get into that later. But I kind of just wanted to introduce y'all like these entry points so you guys understand what to look for. But nah, what's up? Y'all have some questions?
Yeah.
Yeah, my first. Oh yeah, go ahead, Carter.
Thanks. So my first question was about the order block. Like, I see what you're saying here about how what an order block does, but how do you define like where the order block is? Is it only because that's the candle that took out liquidity, or is it some other reason?
Yeah, so you'll see that whenever price moves quickly away from a level that got swept, that's giving you the indication that a lot of orders are getting pushed into the market, right? So it's kind of like going back to the basics. You want to go back to the home price. So if I give you like the logic behind it, whenever price runs away quickly like this, the expansion, it's basically showing you the direction in which price wants to go. But when price retraces back into this order block, it's basically giving banks and all these other orders times to re-enter in the market. You know what I'm saying? Because they're trading the same way we are, but they're just using these different types of concepts to be able to find their entries as well. This is why you hear the concept of like trading with the banks or stuff like that. You know what I mean? Because if you trade with the big money, you're going with the flow. It's like if I'm a small fish in the ocean, I want to go with like the flow of the current so that, you know what I'm saying, it's gonna make it easier for me to move through it. But if I'm swimming against the current, I'm gonna have more trouble. It's the same idea.
Yeah, I get that, but like, why does that candle order block?
Because it took out liquidity. That's what I said earlier, right? So the candle that took out the liquidity, you want to typically aim for like these big candles that do that, right? So we can even take it on a concept like right here, right? So obviously you wouldn't use a candle like this because you're gonna see how like the candle's long as hell. Like this ain't gonna be an order block, my nigga. It's gonna be something more like this, right? So it's gonna be like the last opposite candle before you go. So for example, if I'm going south, I want to use a bullish candle. If I'm going north, I want to use a bearish candle, right? Here's another example right here. So look, I didn't even plan this out. I'm just not seeing this. So price accumulated. Look what happened, right? Price gonna want to spike all the way out through here, okay? Instead of chasing price, let's see what we got, right? So, oh, excuse me. Price violated this high right here. So this would have been the market shift, right? Because this would have been the candle. Or you could also use this one too. You know what I mean? Because you had this like extremely fast run up, right? Then for you want to use this. This is the candle that they're going to use to last sweep liquidity, right? You can even argue this one. Like it's all, you're going to start seeing how you guys can kind of, what's the word? You can just keep refining what you're looking at to get more of an accurate entry, right? So let's just say we would have used this last candle that passed liquidity. Well, once price sprung up for it, we're going to use that last one.
The black one.
Exactly. So, oops. Here we go. Put this right here. Draw it out. Right. And you can see how price bumped this, or tap back into this, and then she had an aggressive swing up. You notice that? So this is a good way. This is a good way for you to flip accounts. When I did that 250 to like 20K in a week, I used order blocks heavy, bro, because those are like the bulk of the orders. Think about it like this, right? Niggas go to like Costco, they go to like Sam's Club because they can buy in bulk, right? This is essentially what I'm doing. So I'm saving money by getting in with like these bulk of the orders and just letting it run off with me. So now because of that, my account is running faster. And you're gonna know that you're in an order block by the way price reacts from it. Like these strong candles, like look at this strong reaction that you get from these levels. There's a reason why that happens. Makes sense? So I'm giving you guys like examples of why order blocks for me are typically my bread and butter. Like if I'm being real with you, if I go in the order of things that work best for me, it goes liquidity. Like catching, you remember how last time I caught the liquidity up here and in the reverse? So catching these liquidity points or also order blocks, because that right there is like you're catching the strongest current that's going to carry you. Like if I'm surfing, I'm riding the biggest wave. And that's why I'm able to move the fastest. I'm able to move the furthest and the fastest. You know what I'm saying? So it's little stuff like that. There's also, so I gave you guys a sell example. I gave you guys a buy example. Let's see if we can find some more. But I want you guys to kind of notice how I'm using price to, or how I'm using liquidity to validate these order blocks, okay? I'm not just picking random points. Now you will see once you start using these higher time frames, right? You can kind of cherry pick. And what I mean is, let me see if I can find me an example. I had one the other day. What day was that? I should have took a screenshot of it. I just remember when I saw it, I took it. It was on a buy. Nah, this a few days ago. Carter, what's the date that I texted you? I think it was that. Oh wait, is this it?
I can find.
Wait. Let me look for that screenshot. I think I took a screenshot actually.
It was Monday. You sent that to me. The screenshots.
Oh, so then it was Tuesday then. So the Tuesday was what? The
June 3rd.
The 3rd. So it's the right day. Yeah, I was almost there. It was not 30. All right, bet. So let me show you how I'm writing this up, right? June 3rd. Where is it? June 3rd. 4, 5, 9. Okay, so let's go back down. And then my TP was up here. Okay, so here's another trade idea that I use. Let me clear this stuff off. So on Tuesday, I'm gonna see if I can drop this in the Discord for y'all, and I'm gonna show you what I mean by order blocks. And then this is what I use for. Alright, cool. Can y'all see that picture I dropped in the Discord?
One second.
I'm gonna pull it up on the screen here too.
Yeah, I see it.
Alright. So again, I want you to see the reaction that price gets off of these levels, okay? So let me move this back. Alright, cool. So this is on the 1 minute. I'm on the 1 hour just to kind of show you like where my head was at, okay? So during this time, 9:30 was around, where is it? Yeah, it was around right here, okay? So this is right here around noon, which was right, would have been right here. Nah, something's off. Wait. Oh, this one right here. Okay. So you see this right here? This little fair value gap right here? This right here was one of my entries. So oh, I'm sorry. I was targeting up here. I'm looking at the wrong one. Let me mark this up right here. Because I remember I had this marked up and I was looking at it. So the reason why I had this marked up is because we had already taken out lows right here. You know what I'm saying? And then we had our market shift occur right here. So let me mark that out. The low taken out. And then we had our market shift up here. And because we're on the 1 hour, I understand that these higher time frames are going to hold more weight. So I can expect like these stronger reactions, right? So when price came up, you can see right here at 3 a.m., she just kept going up. Because I understand price is bullish, I had a strong idea or that's not the right word I want to use. I could believe that this would have been a well defended low, because when price is truly bullish, you'll see that lows won't get swept like that, or I should say strong swing lows won't get violated like that. So when price was pushing up from here around 930, which would have been right around here, let me put down that vertical marker, which would have been right here. There we go. Then I understood that price most likely won't come back down here. Okay, so this is now a well defended low, or this is what we're going to call a high resistance sell side liquidity. Okay, so it's going to take a lot more effort for price to come back down here. And since it already showed me that price wants to go up, I need to be looking for a bullish target, right? So there's this imbalance up here, and the way price was moving pretty heavy, I just kind of understood it was most likely going to start going up to the top one. So this is another example of what I mean. Like when price is pushing for liquidity, you typically want to, or I'm sorry, when price is reversing, you want to start aiming for imbalances and also for what do you call it? Imbalances and I was gonna say recent highs, recent lows, or like imbalances or like fair value gaps, because of stuff like this. So let's go back down to the 5 minute. Let's go back. Cool. So this is what I mean by order blocks. Actually, let me do it on the 1 minute. It'll be easier to see. That was June 4th at 9:30. This is the right day? I don't think it is. Oh, sorry, June 3rd. All right. So I want you to see something, right? 9:30 was right here. So I want you to see how when price swept like these internal low, right? Zoom in a little bit. So when these internal lows got swept, right, these relative equal lows, look what happened. So relative equal lows, you're taking out. So I'm gonna put internal, right? You got your market shift right here. And then once you see something like that, I understand that prices want to continuously go back up. So this is a good example of showing why you don't always want to use, like you can use the row of candles right here as an order block, right? So I want you to notice how the candle that broke the low is going to be right here, but price didn't come back down to it, right? Which is okay. Like that's completely fine. But I want you to notice how like these whole row of candles, price came back into it and it continued to keep going up, right? But then also peep game. So let's pull up those entries that I just had. So I want you to notice how using these row of candles, you can use it as more entries, like to keep going in. And I understand that now each low is going to be now more defended low. So I do not want to see price come back down into it. So this one was around like 12:30. So if we find that here, that would have been up here. Let's put that back up. 12:30. Yep, it hit right around here. And then my entry was, let's put this up. I want to make sure I match this up right. Was it this one? Bro, sometimes trying to match this up, it get hard. That's why I kind of wish I did this on TradingView, because it would mark it for me.
No, it's definitely. I don't know how the fuck you do it. You match it up so easily.
I gotta match it up with like time and market structure. But what I wanted to show you is notice how when price came back above here, these row of candles, it came back into it and then it rejected up, right? So that's how I'm able to get these entries. And then once price made another low, notice how look where it stopped, right? The high of this candle. And then all of a sudden it wants to go right back up. So understanding that, that's giving you more indication like, okay, bet price is using these down close candles as like ladders to kind of keep going up of where it is. So one thing I heard ICT say, he said when price is truly bullish, you won't see down closed candles get violated. And when in the inverse, if price is truly bearish, you won't see up close candles get violated, right? So actually, I can show you on the other one, on the other screenshot that I got. So look at this, right? So when price was coming down, notice how these blue candles, when price would return up into it after it expanded, and then it didn't surpass it. See what I'm saying? It's little things like that.
Well,
And even if we look on this example, right? So this is when price came back into the order block, right? It accumulated a little bit, then started going up. Notice how price did not come back down and violate these lows. See how these lows are protected? That's how you want to trade, so that you understand you're getting in the right direction of price. So I know that might sound a little bit confusing, but what questions do you guys have so far? Because I want to make sure I can like explain it to the best of my ability. Like even you can kind of look here, right? So look at this low, look at this candle, right? Do you see how price comes back into it?
yeah, then it goes back up bullish.
Exactly. Notice how price comes back into it and then it goes up, right? Like
So is that one blue candle? They rather start the red line on the left. That's the border block.
no, the opposite.
Or is the-
So you're always gonna use the opposite candle, so the black one.
Oh shit. Okay.
See what I'm saying?
Yeah.
But again, I'm pairing this with higher time frame analysis. So this is what's giving me confidence in these entries, right? If I'm just popping just to pop, then you might as well just put your money in price picks. You know what I'm saying? That's why I'm telling people you want to match it up with a higher time frame first. And when you have the overall bias, I understand where price is most likely going to go. So when I see stuff like this, I have an idea of what to use to kind of get my trade to where it needs to be.
Wait, what time frame do you use? The hour?
So I would say 1 hour and 4 hour, they're good for your overall bias. But you really want to start with like the daily and the weekly. The reason why, like I would say towards like the beginning of the week, use daily and weekly because it's gonna take a lot more time for your idea on that time frame to change. But the 4 hour and the 1 hour are gonna be good to really use. So for example, that's actually how that trade that I showed you earlier. So let me clear all this. So remember how I was talking about that? Oh look, here's another example actually of two things. So see how when price came back in, these row of black candles, notice how price didn't exceed the low, right? This is showing you that price is wanting to stay bullish. So if I'm going to ask myself where's price most likely going to go with this information, you're going to use the daily time frame to kind of understand that. So you have these relative equal highs. And notice how every time price comes up, she's not breaking these black candles, bro. It's giving you stronger indications. So most likely these equal highs are going to want to get swept, and Nas is going to probably want to make an all-time high, right? So you got this right here. So this is most likely going to be the drawn liquidity. We're already in the right here. We're already in the daily fair value gap. So I understand if price were to come back out of here, she's going to push with some strength. You know what I'm saying? So now I'm going to come back down to the 4 hour. I'm just redefining what I'm looking at. Okay, so I understand if price were to come back down out of here, I'm going to get a strong reaction. So where is it most likely going to go? You want to just start looking for imbalance. So you can see you got imbalance right here. You got imbalance right here. And then just look how perfectly price stops within this imbalance before going up. You see what I mean? Like all of that isn't coincidental. That's what I'm trying to show you guys. And then right here, you could also use this as your order block. So I kind of want you guys to see how to pair.
So that one where the red starts, that's a order block.
Yeah. So these whole row of black candles right here, you could use it as an order block. So if you watch that video that I put in the chat, it's gonna start explaining this more in detail too, because you're gonna hear how ICT is saying using these higher time frames, you're gonna understand where to get these stronger reactions. So, for example, if I see stuff like this on the 4 hour, I understand in this whole vicinity, I need to start expecting heavy bullish movement, and you can see that's exactly what we got. So, another thing that you're gonna hear ICT talk about, you don't want price to exceed like 50% of your, or let me reverse that. Typically, a strong or a valid order block is not going to exceed 50% of your order block range. For example, if this range right here is my whole order block, like I could theoretically take my high and my low, and I don't want to see price come below. And you can see that's exactly what happened, right? Price. So from the top of this black candle all the way down to this wick, you can see how price didn't come past 50%, right? That's good. So that's why typically when I was trading, what I would do is I would set one at the top and I would set one like right here at 50, because price can sometimes like color outside the wick and then go back up. Like that's okay. But this is a good way how I was able to get like sniper entries, because I'm in a sense kind of picking tops and bottoms. So I would use my limit order, or I would have like a buy limit right here, and I would have it set right here at 50, or sometimes like right in between 50 and the top. So kind of like in that 25% range, because then I understood it's a stronger possibility for price to knock me into the trade and then go back in the direction I'm looking to go.
Is that other like right below where your cursor is right now? Those three black candles, is that another order block to the right a little bit? Yeah, right to the right there. Those three, that's also order block.
Nah, I don't think so.
Like I see what you're talking about, but like, yeah, it's just not as clean. It's just not as clean. Like I wouldn't recommend using this as like an order block for a beginner. I think the first thing that you want to do is just start looking for examples that kind of jump out to you, because that's how you get good at recognizing them on your own, if that makes sense.
Gotcha.
Okay, E. So you showed the order block right there where the red is.
Yeah.
Why didn't we respected the high, like at the top. We didn't go past it at the order block. Why didn't the price dump more instead of going back up?
You talking about right here?
No. The high, the previous high, the black at near 29, where it shows 29. No, to the left.
Oh yeah, I see. Oh,
Yeah, yeah. Like, okay, so we hit the order block. Why didn't price dump more after instead of going back up, since we respected that high?
So you're saying why didn't price sell off once it touched this order block?
No, okay, we hit that high
Right here.
and then later, no, we hit that high. Okay. And then we go to the order block, and the order block is showing that it's bearish. Right?
I might have you share your screen so I can see what you're talking about.
Hold on, let me. Okay, so the order block you were mentioning, where the red starts, right?
Right here.
Yeah, why didn't it dump instead of, like, it went down a little bit, but why didn't it go down more? Because we respected that other high. You understand what I'm saying?
What high are you referring to? Like, what high are you talking about?
The one to the left.
This?
No, the one to the more to the left.
This?
Yeah, that one. Yeah.
So you're saying why didn't price sell through here because we respected this high?
Yeah, that's.
So basically, why didn't price keep selling off after we took out this buy side liquidity? Is that what you're asking? So like here, let me clear some of this first. So you're saying this high right here that I'm drawing my line out from, we took it out,
yeah,
right? And you're asking, when price reversed and came back down into here, why did it respect this and not sell through this order block? Is that what you're asking? Yeah. So remember how I talked about higher time frames hold more weight. So because we have these relative equal highs, where's the overall drawn liquidity? It's going to be up here. Right? So this is why I say using higher time frames are going to help you. It's going to help you build a stronger case for what you're doing. Here's also another example right here, now that I'm looking at it. It's crazy. Like, the more I break this down, the more you see it. So I want you to recognize.
Okay.
Let me clear this out. So look when price came back down. Look at this. Look at this right here. Notice how when price came back into it, how she just bounced right back up. Hold on. So what's the open of this candle? It's 21,453, and then the low of this candle 21,440. So 13 points, bro. So even if we break this down more, let's go back down to the 1 hour. This right here is gonna be the daily order block. See if I can redefine this. What day was this? This was May 29th. May 29. So it would have closed right here. I just had to redefine it a little bit more. Okay. So keep in mind the whole daily block is gonna be this right here. So when we come back down to the 1 hour, you can see the price action that it's respecting, right? This is 28, 29 starts right here, so I need to drag this over. Cool. So this is basically like the bulk of the day's action, right? So I want you to see how when price came back into it, how it respected this daily order block, and then it had this strong reaction going back up, right? And look where we traded up into, this imbalance, right? So this right here could have been a TP. So I just want you guys to kind of see how stuff like this, here we go, how all this stuff like kind of keeps repeating itself. You just want to get good at something called institutional order flow. And basically what that means is just understanding like the flow of the market on a higher time frame analysis. If you're able to do that, you're going to be able to track the market and not get faked out as easily. So, for example, because of that, there's two ways that this can play out, right? Because we're accumulating right here, what happens when price accumulates, right? Somebody tell me. What comes after?
Consolidation.
Say that again?
Consolidation.
Nah, accumulation and consolidation they're interchangeable. They mean the same thing. So when price is consolidating,
Expansion happens.
exactly, right? So if we're gonna have an expansion, we want to just use our logic. So if the higher time frame is saying price is gonna go up here, most likely I'm gonna want to see price come back up through here. Now you're probably asking like, okay, bet. So right now, what happens if what if price wants to keep coming back down? For price to come back down, this low has to get violated. So until this low gets taken out, you need to be bullish right here, because this right here would have been your market shift, right? Now, why do you say that? You see how this candle right here, it took out this previous high? Let me zoom in a little bit more. So peep game, bro. This high right here, price takes it, right? Now, this is why I say you want to be patient for your entries, right? Because price can very well keep going up. Buy side liquidity. Okay. Price takes out this buy side liquidity and it comes all the way back here into our fair value gap, right? Excuse me. Now we're still in this fair value gap, right? So because of that, I understand it's basically still in this range. Like the bulk of this consolidation is just within that. What is that, daily? What number is that? 1 hour. Into this 1 hour fair value gap. Okay, this 1 hour imbalance. So understanding that, price could very well come back down, but it ain't gonna do it unless it violates this low first, because this right here would have been the higher time frame market shift. Okay, not the lower time frame, the higher time frame, right? And even on the 1 minute, you can kind of see these are relative equal highs, right? Price comes up, violates it, and now it's working its way back down. So you need to be bullish until price violates this low. So understanding that right now, I'll be like gun to the back of my head, I'm saying price is going up, right? Based on what price is giving me right now. But if price starts coming back down through here, takes out this low, then that's when you understand like all of this is going to get taken out. Am I making sense?
Yeah. It's really just about looking at the higher time frame.
Yeah, that's what I'm trying to tell you. So the higher time frame is going to give
Yeah.
you the context of everything that you need to know. If you can understand what's going on the higher time frame, it's going to give you more clarity in what you're looking at on the lower time frame. Because I had the same questions when I was first starting off. Like when I'm starting to learn this stuff, I'm like, okay, but like there's an order block here, but then there's liquidity here, but then there's a fair value gap here. Like how do I know the order of operations to follow? All of your answers get cleared up on the higher time frame. That's why I'm so anal about telling y'all use the higher time frames first before you do anything. Because if I understand the higher time frame, then I understand with higher probability. That don't mean you won't, because you're gonna get it wrong some days. This is what it is. But you're gonna have a better understanding on where price wants to go, and that right there is gonna give you more confidence in your entries. Because this is when you can like pop lower lots and then kind of look away from your charts because you just understand like where price is going to go. So all this noise ain't really gonna bother you. You know what I'm saying?
Yeah.
All right, what questions do y'all have? I want to make sure like I give y'all some clarity because I feel like some people might still got questions about stuff.
In that 4-hour view, we were defining that order block with the like the daily range thing.
Somebody
Whatever
right
that
here.
is. Yeah. So order block is from the top of the candle to the end of the candle, or the top of the candle to the end of the wick.
Typically I use the bodies. That's just me. But you can use the wicks. But it depends. Like you're gonna learn is like case by case. There's a how do I explain this? So the bulk of the candle or the colored part, that's gonna be like the meat and potatoes of what you want to focus on, right? The wicks are kind of like the sides. Like you really don't need those all the time, but there's a way. Like I don't want to give y'all too much because there is a time when you use the wick as like either a fair value gap or like understand when to understand a reaction from that. But we're gonna get into that later. I want to build into it. But as of right now, just use the bodies of the candle. Let's just start off like that.
Gotcha.
Because remember, this came from the daily, right? And I want you to see how I marked it. It was just on the bodies of the daily, okay?
Yeah.
So this, what you see on the 4 hour is just coming from the daily. I just want to make sure y'all understand that. What other questions do y'all have? I'm telling y'all, bro, watch this video, bro.
Maybe just another which one video?
Bro, watch this video right here, man. This one right here. It's already in the group chat, yeah. He's gonna go over more in detail what I'm talking about, but you're gonna want to start from higher time frames and working your way down. This is a great video that explains it. And then I would encourage you guys to start finding examples of your own. And like I said, this stuff is transferable down to different time frames. But at that point, you're just redefining what you already came to understand on the higher time frame. Meaning, let's say this is what I see on the higher time frame. Like, I see this bullish order block. Now when I go down to the 1 minute, when I see other order blocks, I can use that, right? So this low that I got taken out. We got this right here, just now closed candle. See how price came through and it didn't violate past 50%? Like, this is what I mean by wicks versus bodies. So Carter, this is a good example for you. Where did the bodies close? The bodies closed right there on 50. Okay? But look at the wicks. You see how the wicks kind of colored outside the lines a little bit?
Yeah.
This is why I'm saying, like, the bodies of the candle are you going to be your best bet. So this is a good way for you to kind of redefine it. So this is kind of more of like a higher skilled setup. The reason why I said that is because this is before your market shift, right? Now there's times when you can use this. So I want you to kind of see how I'm stacking everything, okay? So this, let me go back to the higher time frame on the daily. This low right here is based off this bullish order block on the daily. Right here, right? So it's over here. Is where this red line is, okay? So now let me go back down to the 1 hour. You just kind of see it. It's right over here. So you can also, hold on, I messed up. Let me come back down. I used the wrong one. Oops. I used the wrong one. Let me come back down here. Come on. So this one right here is actually between the new day opening, so I can't really use this right now. But typically what I'm trying to show y'all is like how you can kind of stack them. So I've seen this happen a lot before too. Let's say you got a higher time frame order block that you're looking to work with. Now that I understand that, if I see another mini one in that same area, I'm popping off that, right? Because that's now it's double support. So let's say this was the higher time frame one. I would understand, okay, if this is where my daily order block is and I get something like this, then I'm most likely going to pop here, right? Because also think about the, what's the word I'm looking for? I also think about the risk to reward ratio, right? If you were to get in right here, let's get the bullish on here. If you were to get in right here, right, let's just say the top of this, so we'll just say this candle, you would have been risking what, 30 points to go for, because the equal highs were up here. For 114. You see what I mean? So this is why sometimes like you're gonna learn when to kind of jump the gun a little bit, right? But you're having multiple reasons for why you're going to do that. So you have more supporting evidence on why your logic is most likely going to be correct. But I just want you to kind of see like the thought process behind it. You know what I mean?
So you could have jumped into this trade right at the 50% point, the red dotted line.
Yeah, you could.
That's what.
You could.
Yeah.
You would have got more of a return too.
Yeah, and less risk.
But this is why I said for me, like you'll typically see in my screenshots, I got more than one entry. It's for reasons like that, because price won't always come back down into here. You know what I'm saying? Sometimes they'll just tap into the beginning and then take off. But for me, I like to kind of give myself best case scenario. So I kind of frame the risk and I give myself the lot size I'm gonna use and I cut it in half. So like when I run up small accounts, let's say I'm doing a 0.2. I just do 2 1 cents. So I'll do like one here, one here. So then you'll see me have like staggered entries, and that's why they run up like that. And then typically I'll use the first entry for my first take profit, and then I'll use my second entry for like my long-term take profit. So like in this case, I would have my first entry for these equal highs, and then my second entry would be for the equal highs here on the daily, because that's the long-term TP. Make sense? That's what you call leaving in a runner. But all that comes with time. I feel like I don't want to keep going too much in depth because I don't want to confuse y'all, but I'm just walking y'all through like my thought process. Am I making sense at all?
Yeah, I'm kind of.
All right. It just sounds like people are like looking kind of confused on certain things. That's why I want you guys to ask me these questions so I can, you know what I'm saying, shed light on whatever you guys have questions about.
I get it.
Cool.
Before we get off, could I show you the ones I marked up?
Yeah, you tried marking up order blocks too?
No, it was just one I did before the class. Like for the regular, the liquidity sweep, fair value gap, market shift, markup.
Okay, yeah, share your screen. Share your screen and I'll pull it up.
Cool.
Oh yeah, some what you're talking about.
It's the first one right here.
Oh, I'm just not seeing your comment clip cinematics, but you're right. It says liquidity usually sits liquidity usually sits below and above support and resistance. So basically what that means is like whenever you see support or I'm using the wrong terms. Whenever you see liquidity get taken out, those order blocks, they act as support and resistance. So it's going to help a lot, giving you guys more more stronger confirmations, like the trade idea of using it as an order block. It's giving you more confirmation that price isn't going to look to violate that lower high that you just used that was swept. I feel like I worded that so weird, but I hope that makes sense.
All right, so this one right here, fake. I saw the liquidity sweep here, and I saw this market shift. I think I saw on a smaller time frame, like maybe just 30 minutes, something.
You can use that little calendar on the bottom left, and then search up
Yeah,
the
I
date
don't
and
know
time.
what day it was. I gotta fucking. I didn't. I just saw it. Okay, fuck. I should go with this one first. So I saw the liquidity sweep up here from this one to here in the 1 hour. I thought this was the market shift down here. Saw this more on the 5 minute, I think. Okay.
So yeah,
So
that
I saw this here, and then this. I thought this was the liquidity market shift, or maybe this one right here, this green candle, to go into this fair value gap, which it then tapped into.
yeah,
And
you're
I kinda
right.
went up,
That
and I saw again higher.
the one where your mouse is, that setup is correct. So there's a reason why. So this is Thursday, June 5th, right? So
Yeah.
when it's NFP week is just the first week of every month, right? When you have that, typically after Wednesday 12 p.m. price action gets very choppy, and you're gonna see it's gonna start acting a little bit more erratic. So in actuality, that second liquidity sweep on the top that you have marked up, it should have never happened. If I'm being honest with you, because price had already like price. If you bring your mouse to the left or to the right, those green candles right there, like this whole price move right there should not have happened. Like I'll be so real with you, like that should have not happened right there, because we already had the market shift, and price would have already taken out, or we already had the liquidity sweep, and then the market shift where that green candle was on the bottom.
So
The
this
wick.
is the that we already had. That's what we're talking
Yeah,
about?
so right there on the right, that right there should drag that all the way to the right. Yep. So we see where them candles went through that blue line. So delete that one on the top. Delete the top one. So that sweep right there, that should have been a well defended high. That should not get taken out, right? Because that is now a high resistance liquidity run. So that means if you see price come back above there after it already taken out that market shift. So like find me the market shift on this price run right here. Yeah, right there. Yeah, honestly, price should not have been coming back up above that. If I'm being 1,000% honest with you, but one thing I want you to kind of see is this is why I want you guys to be patient, right? So you know what would have saved you right here? You don't have an entry.
What?
Like, if you're going based off of what I showed you guys, the closest thing that you have is that order block, which is that green candle that shot up through there. But even though it came back down, price should have came back down. Yeah, so grab your Fibonacci tool and then go from the bodies of that candle, and I want you to see the way price retraced up into that.
Okay, so from the high of this candle right here.
No, do the bodies. So just do it where the brick is colored. Yeah.
Gotcha. So here it's the bottom of it.
Yep. And then drag it to the right. Yeah. Keep going. Right there. No. Too far. Okay. So you see when after price took out that low, those long two green candles shot up. I want you to bring it up to that point. So I want you to see how when price retraced up into that order block, how it came up to 50% and then reversed. Are you following me?
Where?
So
No.
you see right there where your mouse is. You see where it's that green line where it says 50%. Now look at the candles right underneath it. You're gonna see a fat red. Yeah, that red candle where your mouse is. Notice how.
Yeah.
Oh, excuse me, bro. I've been talking all day, bro. So like my voice is tired. I ain't gonna lie. But
Forget it.
Yeah, so you see how price had a heavy retracement from that area. And now in real time or on a normal day, price should just be tanking from that point. You know what I'm saying? It should not be trying to go up all the way through and liquidate the liquidity that just got swept. Like, that's not normal. When you see stuff like that, that's your indication you need to step out the market. Because like it's being what's the word I'm looking for? It's being manually manipulated because they can do that. You know what I'm saying? The same way you can go into JavaScript and change the code, like people can do that. You know what I mean? That's what they call manual manipulation. So when price starts doing that, you chop cheese, bro. Like, you know what I'm saying? They're basically shaking up the grounds on something that's already hard to do. So just don't even trade it. But you still could have made some bread off that move. You know what I'm saying? So even if you were to break it down even more, like go to that same price action on the 1 minute. But this is good practice that you're pulling it up by yourself because it's going to help train your eyes to see what I'm talking about. Because I'm still working on learning how to explain certain things that I see in my brain, but I want to make sure you guys are getting to a point that it makes sense for you.
I have the hardest time finding the shit.
So then what I would do is, so hover your mouse around that time. So this is the January or June 5th at 10 o'clock. So click 1 minute and then click on that calendar and then do June 5th at 1 p.m. or whatever 10 a.m. I'm sorry, 10 a.m. So keep scrolling. 10, yeah, right there. And then hit go to. Make it life easier. Okay, cool. So I want you to see, like, bro, look at the precision of that. Look at the precision of that, bro. Like, you see how price came right up to that 50% and then reversed? This is how I'm able to snipe so many times, bro. Because, like, when you see this stuff over and over and over again, like, you go like, oh, yeah, like, you know what I'm saying? You start looking at your chops. You be like, oh, yeah, nigga, yeah, go ahead and set me up there real quick. You feel me? But even then, like, I want to show you something. So look at these red candles when they're selling off, right? And then also look at the point at which price reversed back up. So when price hit the middle of that order block and it came back down, you see how it swept that internal. No, you're in the wrong area. Move your mouse to the left. So yeah, now go all the way back down to the start of that move. Then draw a line out from that and draw it all the way to the right where that red candle shot through it. No. Like the red wick. That's the low. Go from the low.
Oh, go. Okay. From here.
Yeah. So technically right there, that's internal liquidity. Like you could have had a TP right there. You know what I'm saying? TP1 could have been right there. Now TP2, you see if you go further to the left, those relative equal lows. For me, I would have been aiming for that, which means I would have missed my TP. I'm just being honest with you, right? Because when I see relative equal lows, like I'm already knowing price wants to go take that out. You know what I'm saying? But this is why it's good to have your stop loss and profit and things of that nature. Because I want you to see the way price reacted when it came back up, when it came back from that low. This is why I'm always telling you guys go for low-hanging fruit, right? Because if you go for low-hanging fruit, you're maximizing your profits. So now, if price were to not hit your main target, you still made money. And in this case, you only missed it by like a few points. So I think it's probably like, what, maybe 10, 15? That ain't bad. So I want you, but again, my main reason for showing this, look at the precision of the way price is moving from these areas, right? So notice how you used a higher time frame order block to get a stronger reaction on the lower time frame, right? So you're using all of your tools together now. You know what I'm saying?
Yeah.
Cool. W example though. I ain't gonna lie. You know what I'm saying? I'm glad you put that up. You know what I'm saying?
I had another one, but it's fucking lost somewhere. So for another day.
We need to ship it back.
I need my cheese. Yes, yeah. Bro, I freaking love those sounds, bro. Dang, I need to get Nitro so Benny can put some more in there. You know what I'm saying? I need some more in there. Yeah, 2 ain't enough. You know what I'm saying? Shit, I'm gonna go ahead and spend some on my damn so nigga. Hold on, goddamn. You know what I'm saying? Yes, sir.
You gotta know what the hell is, bro. I
I'm like the hell yeah. I think somebody say some funny shit.
Nah,
value gap.
yeah, bro. We need them, man. But yeah, bad. That's what's up. So hopefully that shed a little bit more light on how to get your entries. So now that you guys have the framework, today we just kind of learned how to redefine what we're looking at, so that we can now get our entry points, right? So you guys understand the frame of the car. Now we're starting to work on the interior. You know what I mean? So at this point, it's really just about.
Wait, you had one more question.
Peanut butter leather seats in my interior.
This nigga going for the peanut butter seats. What's good, Josh?
Now, can you show your chart again?
Yeah.
The it was the 1 minute.
You talking about me or Carter?
E. Yeah, E.
All right, hold on.
I think it was from June 5th too.
You said June 5th?
I think it was morning. I think it was like Loki was around the same time as Carter.
So today?
Wait, today's June 6th? No, June 5th. June 5th.
At 10?
I think so.
This is June 5th.
It's when the market went down.
All right, so we're right here.
So like, okay, and you said there was an order block that you took the entry from. Was it this one? The one that? No, this is 1250.
Did I put a screenshot in the chat?
I think so. Let me go to the chat and see.
Yeah, I'm trying to see what you're talking about, bro. Wait, look at. Oh wait, you can't see my screen. Hold on. All right, look at my screen. You talking about this right here, or like what screenshot you talking about? You talking about this one?
Wait, click that one.
Yeah. What about it?
Yeah, I think that one. So you said like the entry was that first purple.
I mean, for a fair value gap, yeah, but the order block would have been this blue candle right here.
Okay, so that's where the entry was.
For this one, yeah, but I manually executed this one. That's why it's not like on it, if that makes sense. But if I would have had a sell limit, then it would have been directly on it. It would have been more precise, if that makes sense. So like here, let me pull this up on the other chart. This is June 5th on the Selly. Let's pull this up, man. Bodega, I need my cheese. That shit gonna be stuck in my head, bro. All right, June 5th. All right, it was right here. Let me go back down to the 1 minute.
Oh yeah, go 1 minute.
All right, it's right here. So this is what I mean by saying it can be transferable on different time frames, right? So we got the liquidity, got the shift, then you got this right here. So
okay, yeah. So the TP is at the 830 wick, right?
yes.
Okay.
So liquidity is just areas where price moves quickly away from, and the way that you can define it by having these long wicks, right, or this heavy price action. So notice like this strong reaction, like price came back down here and aggressively wicked back up. This is going to be a target going forward because this is now a defined low, right? So understanding that, this is going to be my TP. So I want you to see.
Okay.
Hold on. Let me.
So like, I guess my question would be: you see the order block, right?
Which is right here.
That one, yeah, that. So let's say you take the entry right there. Wouldn't it like after a few like? Wouldn't it be invalid since you go back up?
What you mean? I would have been out the trade right here. TP would have been hit. It's in the screenshot that I sent you, bro.
Okay. Yeah. But like,
I'm like, hey, Nas can do whatever it wants. I already got my money, nigga. Like, I don't care.
I'm not talking about when it goes to there. I'm talking about when it goes to. Okay, go back. So like the order block is going down, and then go to the wick next to it. It goes down all the way to the wick before. Like okay, go to the order block, right? And then go like right beside that wick. Okay, so you see that black wick right beside the order block?
Right here?
No, go to the right one.
This
Go to the left one. The one right in the middle.
Right
You
here?
see how the wick goes all the way down? Yeah, that one.
Yeah,
And then
well-
it goes back up. Wouldn't that be like invalid since it goes back up?
Nah, price is just retracing into the order block. That's all it's doing. Like you got to keep in mind, we're on the 1 minute, bro. Like this analysis came from the higher time frame, so like price still has to make its way down here. It hasn't done it yet, so that means because all this is the market here. Let me mark it up again so you can kind of see it. Let me get some pictures right. So this high right here. Right there. And then let's clone this. And then this right here, these are relative equal highs, right? So you remember how I said the order block, the order block is going to come after the liquidity. So we got this, we got this sweep right here. These relative equal highs get swept at 9:30. This is going to be the bullish internal liquidity, right? After after it did that, what is this? What would this low be considered, or what?
Internal?
No. So when you have liquidity get swept and then a previous swing point get violated, that's called a what? You can call somebody if you don't know.
Yeah, let me call somebody. Yo, Carter.
What do you call it?
You said you called me. Repeat the question one more time.
So I told him, I said price violated this high, right? And then it reversed and it violated this this swing
Oh,
point.
so market shift.
Yeah, exactly, market shift. So that gives me the inclination that price is not going to try to keep going up, right? It's going to try to come back down. So understanding that after I had this market shift, now I got to find my entry, okay? This is only valid because I got my market shift, because now I have the context at which the direction price is going to move. So understanding that, okay, boom, I got a fair value gap, and then I also got an order block. For me, I personally prefer order blocks because they're just more sniper entries. You know what I'm saying? I get a few extra pips. You know, it's a little bit extra cheese on my pizza. You know what I'm saying? A little extra toppings for the low. You know what I'm saying? Plus I get to redefine my risk. So understanding that, that's how I got this entry, and you can see price didn't even get close to 50%. You know what I mean? And then from there, just look at the strong reaction that you got after it tapped into the order block. So this is what I'm trying to show you, like, and then it came right here to TP, right here, which is the low. So sell side liquidity. Oops. Hopefully that answered your question a little bit. If not, let me know, because the reason why like this wick would have not have invalidated this is because this is just a market shift, right? The liquidity or the target was further below it, which means price still had more ground to cover.
Yeah, okay. Yeah.
Cause you like, let's just say I was wrong, right? If I would have had this market shift right here, and then I got my entry right here, but then price kept going up, I only would have lost a few dollars, bro. Like it wouldn't have been too much. So let me show y'all real quick. Like this is what I'm saying. Like the whole. Hold on, I can't do two things at once. Here we go. Okay, let's say I got in right here. The high. I only let's just say I only had a 0.01, right? That only would have been $24, bro. Like, so I basically I put up $24 to make 100. You know what I mean? Yeah. So like this right here would have been a good trade because your risk is a lot higher than the reward, and I already have multiple confirmations on why I see price going further south instead of it reversing back up north. Now, in the case that I was wrong, like, and again, it's gonna happen at times. This is why you have proper risk management so that you're not blowing your account. You know what I'm saying? Because like, let's say I have $1,000 account, I gotta lose $24 hella times before I got zero change in my account. You know what I'm saying? Versus if I'm putting in like a 0.10, that's 240. I got about 2, 3, 4 trades in me before my account gone, theoretically. So that's why I'm telling y'all, like, you know what I'm saying? Be smart with your money. But once you start trading in the demo more, all this stuff is gonna start making more sense. You know what I'm saying? Because it really comes down to reps. Like, you're not gonna get it overnight. Like, you got to put in that time in yourself. And once you start doing that, the stuff becomes easier to recognize. It becomes easier to trust when you're trading it. So,
I think that doing demo part's
yeah, because I ain't gonna lie. Hearing somebody explain it versus you doing it yourself is two different things. Because you got to learn how to trust it. because it's easier to see it in hindsight. You know what I'm saying? Like, we know what happened, so now it's like, okay, like it makes sense, right? But what about when you don't see none of this? What about when none of this happened yet? This is all you see. You're like, damn, do I jump in right now? Do I wait? You know what I'm saying? But the reason why I'm showing you guys repeated examples in the past is to give you guys confidence in what to expect going next or going forward. Because let's just say I see this, right? Then I get to trust, okay, I don't have to hurry up and try to chase this when I know there is a high probability price is going to retrace into either a fair value gap or an order block before continuing in the direction that I'm seeing price move. So I want you guys to understand like the reasoning or the logic behind what I'm explaining, because it's going to give you guys just more confidence when you're trading by yourself. And that's why I said, like, you guys need that time on the charts when it's just you and the chart. Like, there's no other way around it. Like, I can teach you how to shoot a basketball, but you gotta pull the jump shot.
Yeah.
Like, I can't shoot for you. It's the same thing. So I'm showing y'all the form. Now I'm just showing y'all when y'all in the, you know what I'm saying, when y'all on the court, practice this when you know what I'm saying, when you're outside by yourself. So then by the time the game comes, it's like, oh yeah, I done got 100 of these. You know what I'm saying? Now you're looking like Tyrese Halliburton. You feel me? So. But yeah, good session today, bro. I ain't gonna lie. I feel like we got some ground. I just want to make sure people have like a solid basis, because again, we're gonna keep going over this stuff. I'm not doing one of those things like in school, like they teach you one time and it's like, nigga, you better catch up. Like, you know what I'm saying? We ain't got no timeline. Like, nigga, this me. You know what I'm saying? I do what I want. Free timid. See ya. You feel me? Yeah. So that's why I'm like, you know, we can move at the pace that we need to. I just want to make sure my niggas get right. You feel me?
Facts.
Bet that. So y'all got any more final questions before I close this out?
No, I'm good.
Bet that, bros. But yeah, if y'all got any more questions, bro, just hit me up. You said what?
I said, Ben, is he at the crib or not?
He might be. He might got like an hour left. You know what I'm saying? But you know, before we go, we gotta play one of these. You know what I'm saying? Yeah, right. That's about to be the anthem, man.
You need to make a order block.
Just about to spam that one. Hey, and then anytime Abel blow his account, I'm hitting him with the baby. Does Abel need a hug? You know, it's all good, my boy. It's all good. It happens to the best of us. You know what I'm saying? And then when we hit TP.